throughout Wall Street. Into this report, we have seen estimates come down across the board.
A few weeks ago, around 304,000 was the estimate, and that's just coming down every day, it's seemingly, with the concern being China, right? So
in this video, Tesla stock down again as the S&P 500 has its worst start to a year since 1962, 60 years ago. New data shows Tesla has no competition. Who'd have thought? Tesla stock analysts finally trimmed their Q2 delivery estimates closer to reality. And new analyst forecasts suggest insane growth in EV sales, yet simultaneously, idiotically, in fact, moronically, also suggest that both Government Motors and Ford will overtake Tesla in EV sales by 2025, 3 years from now. We have a lot to discuss, so let's get into it. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks. Check out the links in the pinned comment below. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. So check out the links in the pinned comment below, and thanks for your support. So as I continue to sound like a broken record, Tesla stock today down again, closing just over $670 per share. And here's the kicker. Over the last 1 year, finally done it, folks. Tesla stock down 0.66% in the last 1 year. Certainly been a bumpy ride, but the point is right now, to me, this does not make sense. It happened, and lots of things that don't make sense happen in the stock market, and when that occurs, the disconnect is called opportunity, in my opinion. Tesla's market cap now is officially under $700 billion at the end of June 2022, despite everything that's happened over the last 12 months in terms of Tesla's execution. Anyway, today the Nasdaq 100 down over 1%, Apple down almost 2%, Amazon stock down 2.5%, Alphabet stock down 2.5%, Rivian stock down 2%, Lucid stock down almost 1%, and the ARK Invest flagship ETF down almost 4%. And if you think the stock market's having a hard time, let's not mention any cryptocurrencies. Just to put things in historical context, we're looking at the S&P 500 returns here, basically the first half of every year, going back to well before anyone watching was born. And we'll note, 2022's S&P 500 return down almost 21%, the fourth worst start to a year in the history of the S&P 500. I'll tell you what, if things move a little bit further south, we'll easily get to the number 3 spot. 2's looking like it could be in trouble as well. This is the worst start to a year for the S&P 500 in literally 60 years. Of course, this is definitely not an opportunity to buy the dip. Instead, you should be doing what everyone else is doing, which is panicking. I think, something like that. Don't listen to me, I don't know what I'm talking about. Plus, I might be high. Now, onto Tesla Q2 delivery estimates. Great tweet here from Troy Teslak, who you should all be following. Troy has an astonishingly accurate record in forecasting Tesla deliveries. I don't know why you would pay any attention to the Wall Street clowns when this guy's out there nailing it quarter after quarter after quarter. I just want to illustrate something very interesting here. We're looking at Tesla delivery estimates for Q2 2022, going back to the 5th of April this year. Along the top, analyst consensus, and along the bottom, Troy's own estimates. Huge disconnect back in April. Why? Wall Street at 340,000 vehicles delivered, Troy at 273,000 vehicles delivered. Why on earth would there be such a gigantic gap, especially when Wall Street usually massively underestimate Tesla deliveries? Yet we see here, 340 versus 273,000. How could Wall Street be so off the mark? What were they missing? Apart from significant amounts of grey matter, that is. The answer to this question is, of course, the fascist, futile, and inhumane COVID-0 lockdowns in Shanghai. It was pretty evident, given that Tesla's factory was forcibly shut down and they weren't producing any vehicles in Shanghai for a period of time earlier this year, that deliveries would be massively down in Q2. Yet why on earth did it take so long for the Wall Street consensus to fall toward reality? I have no idea what these clowns were doing, but the good news is, Wall Street consensus estimates have fallen consistently over the last few months. Finally, Wall Street consensus estimates now about 257,000 vehicles delivered, and Troy is at 254,000. So this is good news in that the stock market shouldn't be surprised when Tesla deliveries come in somewhere around that 250 to 260,000 mark. I just still can't get over how f***ing slow Wall Street is though. Now before we get to the new data showing Tesla has no competition, plus the new estimates for insane EV growth, a few quick comments in the mainstream finance media about Tesla Q2 deliveries. By the way, we should get those figures within the next few days, so stay tuned for that.
All eyes are on market mover Tesla ahead of the EV maker's much anticipated delivery report. Shares are down about 10% in June alone. Yahoo Finance Senior R correspondent Praz Subramanian has more on this one. And Praz, throughout Wall Street, into this report, we have seen estimates come down across the board.
A few weeks ago, around 304,000 was the estimate, and that's just coming down every day, it seemingly, with the concern being China, right? So let's take a look at the numbers today alone. We saw from Deutsche Bank, analyst Emmanuel Rosler, known as a Tesla bull, kind of knocking his estimate down around 65,000 vehicles, going to 245K from 310. Again, he's talking about these prolonged COVID shutdowns in China and logistical challenges there. Also Goldman, right? So Mark Delaney there had cut his estimate down to 261K at the end of May. He said that he's seen that we might see in line at 250 is what his downside is right there. And then finally, Wedbush, Dan Ives, of course, Uber bull on Tesla. He's going to 250 from 277 because anything above 260K will be viewed positively by the street. He's saying that basically June will be ugly and nothing to write home about, but he's looking through for second half, any kind of demand kind of story there, any kind of positivity there. And it just kind of shows you Saz, I'm a little surprised it took him this long going into this weekend when you might actually get those numbers coming out.
As I said earlier, completely agree. I still can't understand why it took the Wall Street clowns so long to update their delivery estimates for Tesla. The only reasonable solution I can come up with other than being lazy, slow, and or stupid is just being scared little bitches and waiting for everyone else to update their figures and then copying each other. All the information was available prior to now. Months ago, we already knew how long Tesla's Shanghai factory was shut down. We already had data for April deliveries, which was enough to infer, well, hang on a minute, if that was only just over 10,000, it normally would have been 60, 70,000, or so we can, I just don't know what the they were doing, really.
So, and we knew this story about a month ago, so it's sort of like just waiting for that, that deadline, that production come. Sure.
It's the 3 and the Y that really account for the majority of the production and deliveries right now for Tesla. But also on the other end of that, it's how many of those orders are actually opting up to a higher package or a higher tier. Do we have any sense of that? And that particularly impacts the profit margins as well for a company in Tesla.
Yeah, if you go on the website and try to order a 3 or a Y, you'll see a delivery date of December or next year. But if you add something like FSD, the full self-driving costs $10,000, it'll come down a few months, right? So they know they're going to optimize those orders that are for higher priced, higher tier Model 3s and Model Ys. And also today we saw an electric story about how the Giga Texas actually is ramping up pretty fast, 5,000 deliveries per week now. They don't know how long that can be sustained.
Yeah, this was a fairly dubious report. A few people seem to be under the impression that Giga Austin is already ramped to 250,000 plus vehicles per year. Fat fucking chance. That being said, it's good to see that they are delivering vehicles from the Austin factory.
But they're trying to bridge the gap there with these Q2 numbers. Hopefully, you might see a little surprise there, but it seems like you're going to see around 250K this quarter from 310 the quarter before.
And this is all sort of in line with what we've been hearing from Elon Musk himself, right? That things are going to slow down, that he feels like we're going into recession.
I hate to be that guy, but the is she talking about? Tesla's lower Q2 deliveries have nothing to do with a recession or the economic environment. It has to do with their factory being forcibly shut down in Shanghai for the better part of a month.
And that he's going to have to cut jobs, although he's talking about mostly cutting jobs, interestingly, on the salary and not on the hourly production end. So I wonder if that's going to have to give at some point too.
Yeah, looking ahead to Q3 and Q4, are you going to see any kind of drop back because of the fact that they're cutting these jobs? And I've heard some jobs are delivery specialists and things like that actually do matter when it comes to fulfilling these orders. So I think that is a concern, but when you start seeing stuff like Giga Texas and Giga Berlin finally coming online, it might recoup some of those losses, and you might see, I think Ive still thinks we're going to still see a 50% CAGR on that growth rate, so 1.4 to 1.5 million this year. So maybe they can actually make it with a slimmed down Tesla.
I have to say, the only thing capable of stopping Tesla delivering at least 1.5 million vehicles for the full year is more idiotic, futile, fascist, inhumane shutdowns in Shanghai. And now onto some new data showing surprise, Tesla still has no competition. Who'd have thought? We're looking at year-to-date top 10 OEM global battery electric vehicle sales. This data is up to and including May. Ranked number 1, Tesla. Year-to-date sales over 400,000. Year-to-date market share 17%. Coming in at a distant second, BYD, Chinese automotive manufacturer, with just over 250,000 sales with an 11% market share. Number 3, Government Motors. There's a caveat there, we'll talk more about this in a moment. Almost 200,000 electric vehicle sales. Almost every single one of those, the Wuling Mini EV, a joint venture in China, the vehicle that's so small you can literally fit it in your handbag. I mean, hey, it's something, but if you remove GM's mini EV sales, they're not even close to top 10. VW coming in at number 4, 7% market share. Hyundai, number 5 with 6%. Stellantis, 4%. No other automotive manufacturer, including the large conglomerates, even selling 100,000 electric vehicles year to date. Let's look at a few highlights from this note from Morgan Stanley. Global EV tracker. Auto recession slows EV growth, but pads Tesla's lead? Question mark. I'll answer that question. Yes, it does. I feel like someone has said that repeatedly in the preceding months about recession and drama and supply chain challenges and material costs, and that being advantageous for Tesla and detrimental to everyone other than Tesla. But I can't quite remember where I've heard that, so maybe I imagined it. Quote, we see potential for slower growth and higher rates as headwinds for EV efforts by startups, true, and legacy players, true. Tesla's biggest risk? China and itself. A few key highlights from the month of May 2022. Number 1, global battery electric vehicle sales up 64% year to date and up 30% versus last month. Number 2, top battery electric vehicle OEMs globally. Tesla at 57,000 sales. Remember, this is just for the month of May, and keep in mind there's lumpiness every quarter. Still, Tesla taking out the number 1 spot. 3, top global battery electric vehicle models. Number 1, the Wuling Hongguang mini battery electric vehicle, aka the thing you can throw in your handbag. Costs about $4,000. Number 2, stunningly, Tesla's Model Y selling nearly as many units as the Wuling Mini at 28,000 and Tesla's Model 3 at 23,000 units. If you want to factor in purchase price and the fact that an extremely affordable product will sell many more units, doesn't cost as much to make and so on. Given that Tesla's Model Y and Model 3 starting price is more than 10 times higher than the Mini EV, if you want to adjust these sales for price, factoring that in, the easiest way to do that, real simple math, would just be to cut down the Wuling Mini EV sales to 10% of the current figure, or just inflate Tesla's sales by about 10 times. Number 4, Ford sold 7,860 units of the Mustang Mach-E globally in the month of May. So round of applause, Ford, to start. That is all it is, but it is a start. And it was the 3rd highest selling battery electric vehicle model in the US. Impressive. Obviously, Tesla taking out the number 1 and number 2 spot with the Model 3 and Y. Number 5, Government Motors continues to ramp up its battery electric vehicle sales, growing to 42,124 global battery electric vehicle sales in May 2022. You did it, Mary, you led. And it matters. This is stunning. I had no idea. Oh, hang on. Note, however, the Wuling Hongguang Mini EV is sold in China and priced around $5,000 and is allocated to GM based on its China joint venture. Outside of GM's China joint ventures and the Wuling Hongguang Mini, Government Motors sold 1,831 cars in the US, electric cars in the US. So this is probably the more accurate figure to use for Government Motors. Remember we saw that table, the top 10 earlier? I said GM wouldn't even be on it if you take out the Wuling Mini EV. Well, there we go. Number 6, Tesla's share of the global battery electric vehicle market in the month of May 2022 is 11% versus 10% share last month and 17% share year to date. And Morgan Stanley noting here, the variability in numbers month over month due to chip shortages and production delivery cadence. In other words, looking at a single month isn't a super accurate forecast because there's lumpiness, there's a huge delivery wave toward the end of the month and so on. But it's something. Geography. Number 1, US battery electric vehicle sales are up 65% year over year. And importantly, US EV penetration in May 2022 is at around 5.3% versus 2.3% a year earlier. Strong exponential growth. 2, Europe battery electric vehicle sales up 18% year over year. European EV penetration in May is at 11.4% versus 8.4% a year prior. And in China, battery electric vehicle sales up 89% year over year. They say a picture is worth 1,000 words, so I'm not going to need to say too much here. We are looking at global battery electric vehicle sales, May 2022 year to date versus May 2021 year to date. This is global. EV sales up 77%. And the last one here, battery electric vehicle penetration, just the month of May, not year to date, but just the month of May 2022 versus May 2021 in the US from 2.3% to 5.3%, more than a doubling. In Europe, 8.4% to 11.4%, and in China, 10.3% to 19.8%, a doubling in a single year. In each of these cases, we're within 3 or 4 doublings of EVs making up 100% of the new vehicle market. People are not getting this. And here we are over on the Detroit News website. Quote, Car Wars. Analyst predicts GM, Ford, will surpass Tesla EV sales by 2025. And this guy on YouTube predicts that the analyst responsible for this forecast will have resigned in disgrace by 2025 for being completely wrong. Bank of America's annual Car Wars study predicts Government Motors and Ford will surpass Tesla. I can't. Oh, how do any of these people have a job? We'll surpass Tesla in electric vehicle sales by 2025 as traditional automakers claim more of the market pioneered by the Texas-based EV maker. It's been an open question for years whether the more than 100-year-old legacy automakers are the leaders of the past. As industry disruptor Tesla has secured enormous valuations, questions arose whether the traditional automakers would have the knowledge, dexterity, and ability to make the transformation. Spoiler alert, they don't. Some of them will limp along. Maybe at the end of this decade, if they haven't gone bankrupt, some of these companies may even be selling close to 1 million electric vehicles per year, instead of many millions of ICE vehicles per year as they currently do. The industry may soon have an answer, said John Murphy, senior auto analyst, soon to resign in disgrace, for the bank's global research. Tesla's more than 70% market share in EVs, by the way, they're talking about the US, could drop closer to 11% in the next 3 years as competition increases from legacy and startup competitors. Remember earlier in this video, General Motors sold like less than 1,500 electric vehicles in the US? Yeah, okay, whatever you say. Meanwhile, GM and Ford are expected to approach 15% by then with new EV offerings. Make sure you're sitting down for this one and you don't have any liquid in your mouth because it's going to go everywhere. Quote, "He's introducing product at a slower rate," Murphy said of the Tesla CEO Elon Musk. Quote, "He doesn't have a full product portfolio, so there's huge opportunity for manufacturers to shoot the gap and catch up a bit." Now, in fairness, it's true, Tesla doesn't currently have a pickup truck on the market. They don't currently have a van on the market. They don't currently have a semi-truck on the market. But you know what they do have? The best sedan, no questions. The best SUV, no questions. And a pickup truck coming soon. There's not a whole lot of missing pieces of the puzzle there. Yeah, you know, the van, it'll sell a little bit. I get it. The semi, a little bit. But Tesla's pretty much covered all the bases now. They just need to drive costs lower. But they don't need to drive costs lower because their wait times are in excess of a year in most places. So, yeah, good logic there. I get the funny feeling that old John Murphy here, maybe of the mindset, having 650,000 different products available for consumers is how you sell more electric vehicles rather than just having a single category killer in, wait for it, every category. New vehicles drive share. Ford's forecasted replacement rate of its showroom with new vehicles is the highest in the industry for model years 2023 to 2026 at 23.7%, which could help boost its overall vehicle market share. According to the Analysts, Government Motors' replacement rate of just 22.4% is just under the industry average of 23%. This is, John, sorry dude, but you are living in the past, my friend. Hey, we're talking about new model years, as in replacement rate. Like that has anything to do with anything. Quote, "The study didn't break out replacement rate for Tesla, which doesn't update its vehicles on a model year schedule. Instead, they just keep making their vehicles better. Meanwhile, everyone else, instead of continually and never-endingly improving their products, sits around for a year going, what can we do to make this even more compelling next year? Oh, I know. Let's add a new cup holder. Done. That's the 2023 model. Done." This just goes to show the archaic way that the automotive industry operates versus Tesla. Tesla, continuous, never-ending improvement. Every time there's an opportunity to make their vehicles better, make them more affordable, make them more profitably, make them faster, they add a feature, they delete a part, they delete a process. And everyone else in the industry just sits around for an entire fucking year doing nothing. Instead of updating their products incrementally throughout the year, no. Leave it as it is. And when it's time to release the 2023 edition, they'll just spam people with advertisements, attempting to manipulate them into thinking, oh, this is so much better than last year's model. I'll get that instead because it's got that extra cup holder. It's also delayed the launch of its Cybertruck repeatedly. Murphy said Tesla moved too slow in its expansion. Bro, this is real. Murphy said Tesla moved too slow in its expansion, which he predicts will lead to it falling behind in coming years. You cannot make this shit up. Maybe they did make this up. Maybe this is a G-up. It's fake. Surely a senior automotive analyst would not have said that Tesla moved too slow in its expansion and that's going to lead it to falling behind. What? I cannot believe that an automotive analyst said this. Quote, "One of the biggest mistakes that whenever they look back at this in 5 to 10 years is that Tesla didn't take greater advantage of the free money it could have gotten, raise much more, open capacity faster, grow much..." What? I can't even finish a sentence. I cannot believe this. Try my best to maintain my composure here. Blah, blah, blah. Tesla should have moved faster. He didn't. He didn't move fast enough. Notice, by the way, we're talking about Elon or are we talking about Tesla? Why does everyone always do this? We're not talking about Elon. We're talking about Tesla. So why he? Anyway, he didn't recognize what was going on in the market. This cannot be real. Whew, just breathe, Stephen. Guys, I just can't do this. He had tremendous hubris that they would never catch him. They would never be able to do what he's doing. And they're doing it. I just can't fucking believe. I mean, the irony here, you guys understand, right? Talk about hubris. Not from Elon Musk, but from this fucking moron. Let me just go over what we've just read. John McFace, or whatever his name is, has just said that Tesla didn't move fast enough. They weren't growing fast enough. They weren't predicting what was happening. They didn't recognize what was going on in the market. Are you fucking kidding me? Bro. Oh my God. And long story short, Tesla is stupid, too much hubris, didn't know what was going on, and now they're in trouble because the competition's coming and then going to overtake them by 2025. I just cannot believe that this is real. GM plans to spend $35 billion on EVs and autonomous vehicles by 2025 and expects to be the leading EV seller in the United States. Oh God. Let's be honest here, GM doesn't expect shit. They're saying things, they're trying to mislead their dumb investors, but there's zero chance that GM believes they're going to be the leader in EV sales by any point ever, despite what they say. But remember, you did it, Mary. You led. And it matters. And just to substantiate GM's ludicrous claims of being the #1 seller of EVs anywhere, like their goal is 400,000 EVs produced in the United States in 2025. Tesla's Fremont factory today is already producing more than 400,000 vehicles a year, and the Austin factory is ramping up now. The math doesn't check out. Ford says it will have spent $50 billion on electrification by 2026 when it will produce 2 million annually. It expects to be #2 in EV sales by mid-decade. Jeep maker Stellantis is investing $35.5 billion into electrification and software by 2025. But even with plans to offer 25 all-electric nameplates by 2030, it risks market share in the coming years with a 16.5% reply. We need more model years, you this guy's such an idiot. I just can't deal with this. It's doing my head in. Seriously. I'm done with this guy. If you guys want to read the full article, there's a link in the description. I'm not going to give any more airtime to this absolute moron. I want to underscore that. Absolute moron. Tesla moved too slow. Hubris. Didn't see where the industry was going. This is going to be overtaken by GM and Ford by mid-decade. Bro, please resign for your legacy. Let's move on. I'm done taking a dump on John Murphy for being an absolute moron. Oh wait, no, I just took another dump on him, didn't I? I mean, I do want to underscore that point. Absolute moron. But there is actually a point here. You see, as a senior automotive analyst for a big bank, you would hope that you know what you're talking about. But as we see here, John clearly does not, or I'm completely wrong. Of course, we'll just have to wait and see. You see, irrespective of where you look, these so-called experts are getting it completely dead wrong when it comes to Tesla, EV adoption, the so-called competition. Everything completely wrong. And I personally believe this is creating a fantastic opportunity for people who aren't completely wrong. So I guess the main takeaway from today's videos, doesn't matter which direction you look, these so-called experts when it comes to the automotive industry, EV adoption, forecast, no one's got any idea what they're talking about. EV adoption's happening way faster than any of these so-called experts could have possibly predicted. And I literally mean that. Go look at the forecast for EV adoption. Go back 10, 15 years. I think last I heard, we're looking at about 200,000 electric vehicles sold in 2021 or 2022. We're more than 10 times that, but hey, what's being off by an order of magnitude? And remember, as John points out, Tesla weren't moving fast enough. Tesla didn't see what was coming. They didn't understand the transformation in the automotive industry, and they're going to pay the ultimate price by being overtaken by GM and Ford within 3 years, according to John. And I personally believe that within 3 years, John will no longer have a job, unless he's being paid to be wrong. And lastly, don't forget to sign up to Patreon with the card in the corner or the link in the pinned comment. You'll gain access to my Tesla stock price targets over the next decade in the bear case, the base case, the bull case, and the hyper bull case. I keep banging the drum on Tesla stock right now. I have to say it. If you've seen my price targets, you'll understand where I'm coming from. I could be wrong, but if I'm not, holy shit. Plus, all Patreon members also gain access to well over 100 exclusive Q&As, loads of other videos and perks. So, see you over on Patreon. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. P.S. John, please resign. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support. And if you're still watching, you're awesome. I read every single comment on this channel and I really appreciate your feedback. So if you've got any thoughts on today's video, questions, comments, or suggestions for a new video, let me know in the comments below. Check the cards on screen now to browse the merch store, join Patreon, or watch the next video.